Hello, my name is Andrew Abraham. I'm a trend follower, been a trend follower for quite some time, and I want to share a thought with you. Basically, the difference between trend following and so-called gurus. For those of you who don't recognize, this is John Paulson. He became pretty renowned during the mortgage crisis and the housing crisis, where his funds made tremendous amount of money. And he became a guru, basically. But the fact is, he made big bets, and when those big bets worked, he did very, very well. Well, when those big bets don't work, he does very, very poorly. There's a fund right here. It's called the Paulson Advantage Fund. It's one of the worst performers out there. It's down 52% this year. I don't think there's that many people who feel all that comfortable if they've invested with him down 52%. He basically had two problems. He was long in gold. He was also long in banking stocks. And from this, he really had problems in his trading. And give me one sec. I don't know why this came up. And it's back. But really, you can see here, its hedge funds are $2 trillion. So first of all, I'm not here to judge him. I'm just making a statement that he made very big bets. And it was impossible when you make these big bets not to have the drawdowns of it. He had a problem with Forex, which was the Chinese company that was full of fraud. He bought a lot of the banking stocks, Bank of America. And he was also one of the biggest holders of GLD. And GLD, right here, he was the largest shareholder of the SPR Gold Trust, GLD, which is down. So pretty much everything that he touched is hurting him. I mean, gold is down 18% from September. This is an article on CNBC. But what is my point? Trend followers aren't gurus. Gurus don't exist. And if you want to compound your way to wealth or pull out money out of the markets, you have to do an about face. Don't buy into the story of these so-called successful gurus. I mean, there's sites called Guru Focus that you follow them. And I've learned years ago, there is not such a thing as a guru. What I want to show you is ideas of some of the most successful trend followers that have made money over the years. But let me qualify that. It's not easy either. There's no free lunch when you're trading. I don't care what you do. I don't care if it's trend following or anything. You're going to have rough periods. This is an example. This is William Eckhart. He's been around, God, since the 80s, for decades. This is one of his funds, actually started in 91. He's managing $500 million in it. It's not trillions like John Paulson. But what's interesting is he compounded annual rate of return of 15%. With a compounded annual rate of return of 15%, what that means is every 10 years, you 4 times your money. And every 15 years, you 8 times your money. This is what compounding is. This is what trend following can do. But again, he had an ugly period here, down 27%. You can kind of get a rough idea of some of his returns. 1 year to 38%, minus 7, 57%, down 15, 47, 47, 46, 27, down 4. You can keep on going. I mean, there's a website, it's called ISAG, and you can see this. This year he's doing very poorly. And in 2009 he did lackluster. But the idea is, when you're a trend follower, it's, at least in my interpretation, what I personally experienced now going on 18 years, any 1 year, any 1 month doesn't mean anything. Really what means is staying in the game, staying in the marathon, and compounding money over time. Because what's going to happen here, he's down 4, up 20 this way. He basically, for 3 years, didn't make any money. This would be a perfect time to invest with Eckhart, actually, which most people don't do. They buy him when he's doing great. I mean, look at this period, 47%, 47%, 46%, 27%. And you know, trend following is not easy. It's not retirement in a box. There aren't anything such as gurus. The whole concept really is to compound money over time, not go through these ugly, ugly drawdowns, 52%, that when people are betting. When you're following a trend, all you're doing is associating the fact that it could be increasing. If it doesn't, you cut your losses short, quick. And when you look at John Paulson, who really had a fantastic returns back with his subprime bets in the mortgage crash, you know, if you bought into him after, you would be really lost a lot of money. Again, this year he's down 52%. So what is my point? My point is, I personally believe in trend following. I've been able to compound money over many, many years. I also allocate and invest with other trend followers to smooth out my returns. What is the idea? That everything has a plan. You have an exact entry. You have an exact exit with a profit and a loss. I know exactly how many shares I'm buying or how many contracts I'm buying. And everything, every aspect is pre-thought of. I'm not at the mercy of the markets. It's not buy and hold or buy and pray. I'm going to be teaching trend following. I'm working on a course. I'm opening it up for a limited number of students every month. And I'm going to basically teach you everything that I learned over the last 18 years. It's not a get rich quick. It's not a day trading and make millions overnight. It's reality. And it's grueling. You go through long periods, you don't make money. You go through other periods, you have ugly drawdowns like I expressed to you with Eckhart, down this 27%. But over time, if you look at it over a 10-year period or a 15-year period, the way I look at it, you either, if you can achieve these returns like he did, you basically 4 times your money, or you can 8 times your money. 4 times over 10 years, 8 times over 15 years. It's whatever the markets give us. Again, my name is Andrew Abraham. I'm a trend follower. I invite you to my course, and I'll try to help you to achieve your goals and become a consistent trader.